Hello, everybody. Welcome to another episode with me. I am super excited. I always say welcome to another episode because I'm so used to the podcast, but wherever you're watching from, podcast, YouTube, or whether you're here with us live in the Facebook group, welcome. I'm so glad you guys are here. I'm super, super excited that you're watching today and listening to us today. And I hope you've been getting a lot from the series that we're having about how you can prepare for the recession. And the reason why is we are a huge believer in being prepped and not panic. So, as part of that, I've been having all those amazing humans come bless y'all. And I have the pleasure of bringing one of my favorite financial people in the entire world, and it is Mariko Gordon. Welcome, Mariko.
Hey, how are you?
I
So
am
glad to
doing
be here.
fantastic. How are you?
I'm doing well. I like that prepped and not panicked. I
Yep.
really like that. I think you should have a line of t-shirts that say that
Oh,
prepped,
okay.
not
We're going to do that.
panicked.
We're going to do that. I am going to
Money
tell
Fit
my
MD,
assistant.
prepped, not panicked. There you
Done.
go.
So you know what I'm gonna do? I'm actually gonna do that. We're gonna have Benefit MD prepped, not panic, and we're gonna have the shirts running the rest of this. I don't know when. I'll let you guys know when it's available, and we're gonna create it because I want y'all to be prepped and not panic because we're badass physicians. That's what we do. We prep and we do not panic. I love it. See why I love her, y'all. I love hanging out with her. Yes, I've been such a blessing to have gotten to know you over the last, I don't know, months to years. I
Mhm.
had her on my podcast a couple of months ago and it was amazing. And so when I was coming up with the people that I truly value what they have to say, and I think have a way of seeing things that may be different from the norm, I had no choice. But I mean, it was like, of course, I had to have Mariko here. But before we go further, tell people about you. Who are you? A little bit about your background, why I trust you with all things money, and why I do. Tell them, brag about you.
All right. Well, I founded an institutional money management firm that I grew from 0 to 2.5 billion over the course of about 25 years. And my clients were institutional pension funds like firemen, teachers, police, and corporations and foundations. So I was a bottom up small cap stock picker. Translation, I just bought a portfolio of no more than 35 stocks, and they were smaller companies. So I'm very old school that way. And my second career is a money coach, business coach, investment coach. I coach some investment professionals, but also I work with everybody, but usually it's about something related to money, either getting your financial shit together or, it's career work. And I have just also started really becoming a financial educator. So I'm just starting actually next week. So I'm really excited. My first class in creating financial intimacy for business owners. So getting people really comfortable with their financials and deepening their relationship with their business that way. Because so many of us are kind of, we don't want to know. Right? But
Yep.
the more you talk and the closer you get, the sort of the better the relationship. So I'm excited about that. But the biggest thing that I would love would be if you subscribe to my weekly newsletter, which is called Cultivating Your Riches. And it's about money mindset. Sometimes it's business, sometimes it's investing, but it's all about thinking about money differently. And you can find me at marikogordon.com. And I'm also on all the socials too. So that's the benefit of having an unusual name, right, Latifa?
Yes,
Right? With an
yes,
unusual name,
yes.
people can find you. It's good.
Especially when it's easier to spell. People are like
Yeah.
Latifa, Latife, I don't know. All kinds of stuff. But we're gonna have a link to your information as well. So I want you all to go find Marie because I think she's amazing. And we've been in each other's world now for about a year, and I'm really excited for what you're doing. I definitely see us doing more stuff together in the future. So I'm excited
Awesome. I
about
would
that.
love that.
So now that y'all know why she's here, can you share with us? So there's a lot of conversations about what's going on in the economy. Are we in a recession? Are we not in a recession? I'm curious, what do you even think? I'm curious.
Wow. So I think we're in a technical recession, which I think is 2 quarters of like slowdown. And recessions get defined very precisely by economists. But I think the question is, I define it by how unhappy are people financially, how scared, and given that inflation is where it is, given that all the sort of that basically we've got a war going on. I mean, we've always had smaller, but this is like a big one that's affecting Europe, all of Europe. And China is slowing down, has slowed down tremendously. And there's a lot of stuff going on. So there's a lot of geopolitical stuff going on. There's a lot of stuff going on here because rates have to go up. They're very high inflation. And it's going up so fast that it's like destabilizing the system, right? So I promised, I asked Latifa to tell me when I need to talk in human talk and not in
I'll let you
investment
know.
speak.
We're not there yet.
Okay. Oh, we're not there yet. Okay, good. So basically it's like, look, stuff is costing more, and our incomes are not keeping up with it, pretty much. And the income inequality, it just keeps getting bigger. So there's a lot of uncertainty, and it's important to rein in inflation. And so raising rates makes sense. When you raise rates, you put the brakes on an economy. And when you got to raise them this fast, it's hard for the
Yes.
economy to keep up.
It's hard for
Yeah.
the economy and it's hard for people, right? Because it's like people
Yeah.
start to feel the ache. And right
Yeah.
now, I think it's not, I wish it was as bad as it was going to get, but it's
Yeah.
not as bad as it's going to get yet. And what a lot of people in the financial space, because ultimately nobody knows, everyone's just, sort of like
Mhm.
making their best educated guess.
Right.
This has been a long time coming, and the way that returns in the market was so jacked up for a long time that the
Mhm.
same way it was good for too long, it's probably going to be achy for a while. So the
Mhm.
key is, the reason why we're doing all the stuff here is so that we can all be prepped. Because I have, and I'll tell you, Mariko, you may laugh at this,
Mhm.
but here's a vision that I have in my head, and it's stuck with my head. The next 3 to 5 years is going to be important. Whenever there's an economic downturn or recession, there's a lot of wealth exchange, right? And the time
Mhm.
that we're in as well, there are people that are going to be retiring that own things, that own businesses, that own assets, that are just like, you know what, I just want to chill by the water. I don't want to, I'm too
Mhm.
achy and old, and I don't want to deal with this. So really, there's going to be
Yeah.
wealth transfer, ownership transfer happening. And my hope is
Mhm.
that the women that are here are going to be positioning themselves, if not yet, going to be positioning themselves to be able to be a part of that. So I have
Yeah.
this image, and I really, really think I'm going to do it. I think
Mhm.
that in 2025, and I need to choose a year, but 3 to 5 years is what's coming to my mind,
Mhm.
that I'm going to throw a party that for
Mhm.
us as women and
Mhm.
women physicians to celebrate the growth that we've had even in a recession. And that is only going to happen if we position ourselves right now and we do the things that we are talking about right now. You set a plan in
Mhm.
motion. You not only learn, but you execute, right? That is what is going to take for you to be invited to the party. And I really want everybody here to be part of that party. I think of champagne glasses, clicking, or tea glasses, whatever, lemonade part, water, whatever you got. But I really do envision, and I see
Yeah.
this dripping party of celebration, of joy, of gratitude happening. And I do actually, I think I'm going to start putting that 2025, we're having a party and y'all
I
may be
love that.
invited. I'm going to do
I
that.
love that.
So
That is
tell
a great
us,
idea. Thing to
what
work for.
are you doing, or what are some of the things that you are suggesting that your people and humans in general do in order to position themselves to be able to come out on top and be part of my party in 2025?
Okay. Um, I'm going to accentuate the positive, right? I'm not going to eliminate the negative, but I'm going to give you some good hints, like that old song goes: accentuate the positive, eliminate the negative, and forget about Mr. In Between or something like that, right? So let's accentuate the positive first. So the thing about a recession is there's a lot of opportunity. There's a lot of dislocation and there's a lot of opportunity. So to your point, right, people say, oh, you know what, this is too hard, I want to retire. And there's an opportunity to buy businesses, and there's already like a lot of change happening, but there is that. There is also people who've taken on too much risk, can't carry the debt load. They can't, so right, they've borrowed too much, their cash flow doesn't support it, and you have more distressed sellers. Okay. So if you're not a distressed seller, right? So that's it. That's the part we're going to work on, right? There's the opportunity there for you, right? So when there's stress, that means that people who want to sell are going to sell more willingly, are going to sell faster, are going to be willing to, as we put it on the street, hit the bid, right? So if you offer an all cash deal in a terrible real estate market, you're more likely, it's a discount, but it's all cash, you can close tomorrow. That's more valuable in bad times than it is when the market's hot, everybody has money, right? Then you're like, well, I'm just going to wait and I'll get a better offer. And they do, they get a better offer. And right. So now when you can make a good offer because you are liquid, that's part of the setting yourself up, right? You're going to be able to get better deals. So the thing to think about bad times, and this is like, and I speak as somebody as a portfolio manager, when the market was in the toilet like it is now, right? That was always a time of opportunity. That was when I was happiest because I could find things. And when things were going really well, that would always make me very nervous because, it was not, I was worried about it, you need to sell.
Noise.
So yes. It's much more fun to find good deals, right? Than to be hanging on to things that feel too expensive. So I think it's really important to frame tough times as times of opportunity. And because there's more distress, and if you can have relatively less distress, you can take opportunity. And buying things when they're under pressure means that there's less risk in them, right? Because you're paying less, which means you have to carry less. It costs you less, all that stuff. So I think the main thing to think about bad times is there's an opportunity here as well. And the prepping part is the being in a place when you're going through bad times and you see it as opportunities and you're not putting out fires, financial fires, right? Yes. So the other thing too, so I would say, so just think bad times equal opportunity. That already like just so much more relaxing, right? Right. So not just because asset prices come down, but because like sellers are, it's much more willing. As a buyer, you have power. The other thing is service providers that you have are going to be willing to negotiate with you. So you can go back because your business matters more than when times are good. So you can either lock in terms longer, favorable terms longer. You can work with a service provider who was sort of too good for you before, not willing to do work with you. If you want to do work with somebody for whom you were not good enough before, but you know what I mean, right? So there's an opportunity to renegotiate your business relationships. And in order to make them tighter, because it actually, so it's not just, let's just go and exploit people. It actually is good for them because you can commit. You just get better times for a longer commitment. And for them, the longer commitments is more valuable in bad times because it means that then they can plan and predict. So it's a win-win for everybody, right? It's not just you going around it. So those would be the main things on to think about it. And oftentimes businesses that start in tough times do well because tough times mean that the environment, it's the same way as the pandemic changed a whole bunch of things all at once, right? All the behavior, and then they spawned like all this other industry around it. Recessions do the same thing. Things change. And whenever there's change, there's opportunity. So I think that's the other thing. If you start a business in a recession too, there's not too much pressure right there because it gives you more time to kind of figure out how to grow as well.
And you're forced to start lean. You're forced to start lean, which is a great habit to form, right? You're starting lean. You're asking what you actually need, what is excessive, what is not excessive, what are the core, right? And what it does is it's not about like scarcity mindset, but it actually creates a healthier, more authentic, less dramatic, less bells and whistles, but really down to the core of how do I make this great? What is the critical stuff that is important to creating this? So I do love that. I want to ask you a question because you were a portfolio manager during the last recession in the 2000s.
Oh yeah, no, I've lived through so many. I mean, I'm much older than I look. So
you look fabulous, by the way.
I've been through so many crashes and recessions. Yes, I have lived through many of them.
And that's the thing, right, guys? we can, and that's the, honestly, I'm very, very intentional about my growth. I'm very intentional about my time, about my space, about my mental health, about my money brain. And I always tell people that it's really, really important to make sure that regardless of where you are extending and diversifying even your relationships, right? So for you,
Mhm.
it's like you can have relationships with people that are maybe around at that time, but even people that are new. We've had so many conversations. You're like, Latifa, why are people thinking about debt this way? I'm like, this is what's going on, right? And I think there's so much wealth in having these conversations. I speak with like real estate agents, I speak with money lenders that have been around
Mhm.
for multiple generations and multiple cycles. And it's so enriching to learn from them. And I get to bring all that to my women, which I feel like it's giving me like the wisdom of an older person.
Yeah.
But I do want you to share with us a little bit when it comes to like the, how long was that, the last one that you experienced, and where were some of the things that you were seeing that may make you think it's that we can learn from that to here, or maybe you may be thinking maybe different from what we're going through right now?
Yeah. So, what is it that they say about history? It repeats itself, but it rhymes and not perfectly. So
Yes.
every sort of financial crisis and every recession, the causes are different and the impacts are different. So it's hard to say specifically. Usually, obviously, is what happens is that money becomes tighter, so there's less money circulating. It costs more to borrow, which means that then if it costs more to borrow, then the rate of return on whatever you're going to put that money to work has to be higher, so the bar gets higher. And so, of course, the opportunity set gets smaller. So let me put that in English. It just means, right, if like right, if it costs you nothing to borrow, you're willing to buy anything. If it costs you, you know 10% to borrow, you're going to be very picky about what you are going to buy with that money because it's so expensive, right? And so then all of a sudden, like, deals that made sense at 1% interest rates or 0% interest rates make no sense at 5% interest rates. And so then that slows everything down. That's why they talk about like taking the punch bowl away at the party, the spiked punch bowl at the party. And it just has a cascading effect. There's just less money floating around. And usually that's some kind of, usually, rates go up, that acts as a brake. That's the simplest version. The cause of things going down is different. Obviously, 08 had a lot to do with how crazy it got in real estate and again borrowing. But it's always too much borrowing in places that don't make sense. and then and so then it doesn't, then then there's a cascading effect of like things going south. But there's a lot of different reasons for it. And the other thing that I realized is that I came of age. I graduated from high school in 1979. I remember 74 recession.
Hmm.
I remember really high interest rates. I remember I graduated from college in 83. Paul Volcker like saying, never mind, we're going to raise because we got to break the back of inflation. Like, I know when everyone was at a cocktail party bragging about what CD rates they were getting,
Hmm.
right? There's a whole generation out there, right? I'm 60. There's a whole generation out there that has never known double-digit interest rates, that has never known double-digit inflation, right? It's all been like it's been all these years of globalization and deflation and interest rates going down.
Yes.
Like the next 30 years are different.
Yes. 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 Yes.
We're
And
at
I,
an inflection point. That's a very big structural kind of change globally. So that's going to make for a lot of opportunity
and
and
I think it's
dislocation.
important for us to give, and the reason why we keep repeating opportunity is it's, I cannot tell you how many people, and that's why I'm doing this whole entire series. I cannot tell
Mm-hmm.
how many people that I've talked to that are like, yeah, it's a recession, I'm not going to be doing anything. You're just like, people are starting to default into hiding, which is okay. However, you know who's not hiding? People that are wealthy minded, people that have. And if
Mm-hmm.
we and our people are hiding, but they and their people are not hiding, this is not the time to hide. This is the time to get our financial house in order. This is the
Mm-hmm.
time to go back to all the foundations that I've been talking about knowing where our money is going, about cutting out the
Mm-hmm.
excess stuff. Like cash is going to be
Mm-hmm.
queen right now. And the
Yeah.
thing is
Yeah.
this, when we talk about the cost of borrowing going up, I think sometimes we forget the fact that even we can become a bank. We can
Mm-hmm.
become money
Mm-hmm.
lenders,
Mm-hmm.
right? To
Right.
people that, so again, the question is not, things are not always going to be horrible or bad. The thing is,
Right.
where are the opportunities? And also not being perfectionistic about what that
Right.
is and thinking that you have to have all the money in the world. Like if you were struggling and now you're going to struggle less because of how you set things up for the next 3 years, that is a win. If you were
Yeah.
doing great and your net worth was like, whatever, and now over the next 3 years, you're setting yourself up so that when the rebound happens, because what goes down is going to come back
Mm-hmm.
up as long as you're diversified. How amazing will that be? So I feel like I'm
Mm-hmm.
like the town crier right now. That's like, yo,
Yeah.
do not hide. The entire reason, if you don't take anything, do not panic, right? I want
Yeah.
you prepped. And maybe I should add a tagline, which is do not hide. Y'all want to be
Right.
invited to my party in 2025. It's going to be
Right. Do not
happening.
freeze or do not panic. Yeah.
Do
Yeah.
not freeze,
Yeah.
do not hide, do not panic, right? So this
Yeah.
is really, but don't forget there's up, because these are the things that I'm asking myself. And even as
Mm-hmm.
someone that runs a money school, as someone that is comfortable when it comes to our finances,
Mm-hmm.
I already know that I'm already setting myself up. I'm already asking myself, what communities am I going to be in so I can be a
Mm-hmm.
bridge for my women? And I'm already in those communities, right? So the
Mm-hmm.
thing is, the most important thing you're going to do is position yourself to be in the path that of people that are kind, that are not assholes,
Mm-hmm.
that will, yes, they will empathize and say, it sucks right now. It's hot on the
Mm-hmm.
streets. However, we're not going to stop them. We're not going to let you hide. We're going to bring you out and lovingly encourage you to be part of the growth
Mm-hmm.
that is going to happen. Because otherwise, 3 years from now, literally, we are going to say it sucked, we're crawling out, or we're going to say, wow, it was hard, but this is how we set things up to succeed. And that's what this is about. Do you agree?
Yeah, I absolutely. And so I wanted two thoughts. One is I also wanted to add in terms of the opportunity is that the market is always going to bottom before reality does, always, because it discounts the future. The other thing is you don't know when the market is, and nobody does, right? No matter how many big words they use,
No
how
matter
much
how many
jargon
big
they like
words they
hurl
use.
at you, right? Nobody knows, right? It's just too complicated to really know when it's going to bottom precisely. So don't even try. Dollar cost average, put in, invest when the market is down, do it regularly so you don't like get mad at yourself because you didn't buy precisely at the bottom, and have it be money that you spare, because if you miss the big up days, the market has a bias towards going up in general, and that makes sense. There's just growth, inflation, there's
Mm-hmm.
so missing the big up days and the effect of the growth that happens compounding on top of that has a phenomenal impact on you. So it's really important to stay invested and to dollar cost average. And I'm really talking about like long-term mattress money, retirement money, right? If you're going to buy a house tomorrow, this is not the money I'm talking about, that, right? Because the markets can do this. But so that's the other thing, is the dollar cost averaging and the automating it, just putting it aside, buys you peace of mind. And it means that when things are down, because it's, I loved it when the markets were in the shitter, right? But I'm weird, I'm a mutant, right? Most people like, oh my God, it's just different, right? So this way you don't have to, it doesn't activate the fear gremlin in your head, and because it's just happening. So if you're going to hide, like just hide in good financial habits, right? That'll
Yes.
keep you on an emotionally even keel. That's one thing. The other thing, which I have now totally forgot. Oh no, I know. So when things are really, really bad, that's when there's a lot of opportunity, which is what I've said. But like I have a cousin who his his dad was a chef, but they like saved up and bought real estate in Hawaii, just my Hawaiian cousins. And family's done really well, just buying real estate, living modestly, buying real estate, doing stuff. In 1991, when I think it was in 91, when Texas, there was like a giant recession in Texas, he went in and bought like a whole bunch of things then, right? It was because it was like a disaster zone. Okay. But that's the thing when you want to be like a financial fireman, like running towards the fire, right? Because where that happens is where you can buy things and the pendulum swings back and normalizes, right? Now, do you have to know what you're doing? Yes, but my point is that whatever the big headlines about the whole horribleness are, that's probably a good area to investigate, or to find somebody who is investing in that area, and you invest with them, and they deploy the capital. If they're if you're not a professional investor, that's one way to do it. But my point is that's and there was some other thing I was thinking of that was very similar. But that's when the headlines are very screaming and very negative, that's probably the bottom.
So the thing is this, I know that y'all are amazing, and this is something that I used to struggle with before, of when it's sad though, it's like, I don't really want to do that. And the key is this, it is important for us to understand that we get to do money differently. When you do money, it's not the way that the stereotypical, not kind with money handles it. In my opinion, when you are part of increasing the diversity in places where there's opportunities, it means that you get to actually be a part of that and now can create even more good in future with it. So for example, regardless of whether you think people are going to do that, so if you were part of making sure it was done in a way that's ethical, you get to be the one that's renting out the property for a decent price. You get to decide what your cash flow is, and decide that I get to give, like some of our tenants during the pandemic, there were some of them that were not able to pay their rent, and we did not evict them.
Right.
Because
Right.
we have set up our structure so that it's diversified. We do multifamily. So if someone isn't paying, someone else is paying. And that was able to help us run and still cash flow, even though we gave people a break. They caught up later, right? They caught up later. We got them information for resources in how to help offset the financial stress they were going through, but we got to do it differently. If it was another landlord, they may have been evicted already, right? So like, we get to do it differently. We own property where we got this property, we inspected, and we're like, this is unsafe. I would not let a family member of mine live in this house. And we were like, we want to improve the functionality. And in order to be able to do that, we need to increase the rent. And we told them we have to increase the rent by this amount so we can fix this. And they understood that we're still undercharging based on the value of the market. And I remember the tenant telling the contractor, was like, why do these people care so much? Like, our former landlord was our landlord for many years. There was mold. He didn't really care. Like, he thought there was a problem in the fact that we cared. And I'm like, I'm not trying to say I'm good or whatever. I'm never going to be perfect. However, I see that when women are in money, we do it in a way that is conscious, and it's called conscious capitalism. We get to do it in a way that is kinder, and we get to make a bigger change in the world. And that is why I want all of us to not run out of this conversation. I want you to be part of this. I want you to be part of doing good with money, being kind with money. And what I'm honestly believing, that capitalism, gets a lot of bad rep, but I love the idea of conscious capitalism, where we can improve the circulation of money and use it in a way that changes the future, as opposed to hiding and avoiding it. And honestly, that's what I'm inviting everybody here to.
Yeah, I love that. And I want to add a couple of things. One is, because you're individuals, to Latifah's point, you get to choose, right? And as opposed to being a corporation with shareholders where you have a fiduciary responsibility to maximize the return for the shareholders, here you can maximize the return for like the good of humanity, call it, right? You can have returns that are not just financial metrics. They're like return on human capital, right?
Yeah.
For one. The other thing too is that one thing that can happen, so because what you just said made me think, like, because I just said, look, there are distressed sellers who need to sell fast, right? And we can think like, oh my God, we're adding to we're going to take advantage of them. You have to understand, if I have too much debt and I'm underwater and I have to sell this in a hurry, you are doing me a favor by providing me with liquidity and buying it. And, right. And the fact that I got in a jam because I borrowed too much or I ran out of money or whatever, right? It's kind of is my problem. The business deal, it isn't. So I think we have this idea sometimes that if we deploy money and somebody on the other trade is not happy about their circumstances, right? That it's our responsibility because we're like so socialized and conditioned to like make everybody like, the responsibility for everything is us, right? And I think it's important to be able to separate, right, the emotion and our idea about whether money is evil and capital, right? Our emotions from the commercial aspect of it. Right up here when we're making these decisions, and then we can bring them back together when we're trying to be intentional, right? So you're buying something from a landlord, let's just say the landlord, so he's the landlord underinvested and all of that, and you're like, we got to raise the rent, guys, but guess what, you're not going to have toxic mold. Right? And it's still a below market rent because you guys have been good tenants. That's a win-win for everybody. What you described is a win-win for everybody.
Yeah. And that's what I tell people.
You didn't go for the last nickel. You bought a lot of loyalty by being ethical and doing the right thing. And the tenant knew that they were good. Now, if the tenant couldn't afford that, how evil are you being when you're like, otherwise the public health department is come and shut this down because it's not healthy. Right? Do you see, so I think sometimes we need to kind of we need to draw boundaries around the responsibility clearly around the stuff that makes us feel icky, as long as we're behaving ethically, right? But do you see what I mean? Like, buying from a distressed seller is not unethical. Ever. Now, taking advantage of somebody,
yes,
right, is different. That's not what I'm talking about. I'm not talking about, what happened to Japanese Americans where I'll buy your business for 10 cents on the dollar, or like Jews in Germany, I'll buy your business for 10 cents. No, okay. I'm really talking about somebody who it's a commercial decision. And the other thing to realize, particularly when you're buying and selling, is part of the thing that you have to figure out is that's why you have insurance, and that's why you understand what the risks are, and that's why you provision for that. So if I own 10 properties and maybe I was a little too aggressive in what the rent roll might be in this one, right? I have these other ones too. This is like part of business is you fail sometimes.
Yes, you
right?
fail sometimes.
So that's not so I think there's that
it's not all devastating.
It's not all, yeah. And I just want to sort of just to share with that, because I think it can feel sort of icky, but you have to separate what's unethical, icky, in which case, of course, don't do it, and icky just because you think, oh, that person got in trouble.
Yes.
You're actually doing them a favor.
And I think the difference that we are adding on to it is let it be a win-win. And that's a key. And that's different. Let it be a win-win, right? With your contractors, let it be a win-win. With your clients, let it be a win-win. With your patients, let it be with your employer. That's the difference, win-win. And maybe I should do a podcast about that, about the win-win in investing, because I truly believe that is what we get to add. And that's why I want every single human here to make sure they're positioned to take care of their finances and come out well.
I think we should put the humanity back in capitalism. Absolutely.
Oh, I'm actually bringing someone on. Well, I don't think it's going to be here. It's going to be on the podcast to talk about conscious capitalism. I told her she's in Sweden. I told her, okay, you're going to have to slow down. She talks really, really fast. I'm like, you're going to have to slow down. But I do think we can have, she's an economist. And no, this has been so good. I feel, y'all know I love Mariko. We'll talk forever if you let us. But
okay, but wait, I have to put in, because I only told you half. We only talked about half, which is the opportunity in a bad time.
All right, go ahead. All right, go ahead.
What how to prepare for it. Okay, I'll do it fast. So one, you got to pay attention to the amount of debt you have. right? Because what happens in a recession is that banks don't want to lend you money when you need it. They only want to lend it to you when, like, right, when they have money to lend, because it just, money gets scarce, right? It gets scarce and expensive. So get rid of any debt that you get, high cost debt, any debt that you don't really need to do. This is a good time to actually have cash that you can deploy, as we talked about. The other thing is then go through your scenarios, right? So if you're assuming you have an investment and your multifamily apartment rent roll is going to be X, what does it look like when your rent roll is 20% lower, 40% lower? What happens? So you do that kind of
conservative.
Sort of, yeah, the sort of what would happen, so that you know in your head, and then you go, wow, if all 5 of my things are down 20%, the rent rolls are down, I'm going to have trouble covering the debt. Then you go, maybe now's a good time to get rid of one of them, say, I don't know, right? But so assess the amount of leverage, debt, and the amount of risk that you have based on, can the cash flow carry you through the hard times, assuming big haircuts to the cash flow. Those would be the 2 key things, I would say, is you want to lower risk, lower leverage, to prepare. The other thing too is start researching, like so back to your point about rather than hiding, is if you've always thought, wow, I've always thought it would be nice to have X, right? X in the stock market, X an apartment, but X in a whatever. Now's a good time to start researching, right? Because you have the luxury of doing it when you'll get a sense of what prices are in the market. So you'll be able to identify when you can go to somebody and say, I'll give you this, but we can close tomorrow, right? So you'll understand pricing better. So it's a good time to sort of go window shopping for something that you've been thinking about. And it's good because then you'll have a sense, and you'll know when you see a good opportunity, you'll be able to recognize it because you've done your homework. So that's another thing I would do. And then that also kind of makes it, as a sort of squeeze of bad times happens, that actually gives you something to look forward to in a way.
Yes.
Back to, let's not face bad times with fear. Let's face it pragmatically, responsibly, and with seeing the bad times for the opportunity that they create.
I love that. I love that. And it's very reflective of a lot of things that we're doing. And
That's
for those
great.
that have things like short-term rental, you be conservative with the numbers in terms of the nightly return and the per night rate and also the occupancy rate. Those are some of the things. It's time to be conservative. One more thing that I do think is important that we talk about, and it's okay if this goes long, actually. That's completely fine. I'll keep that in mind when we're posting this. But the other thing to keep in mind as well is, it just escaped my brain. It just escaped my brain. But if I think about it, then I'll post it another. But when it comes to debt, paying off debt, by the way, so yes, high interest rate, definitely. The question is the low interest one in this market.
Right.
Those are the ones that this may be the time for you to get a little bit comfortable with sitting down on the low interest debt so that you can actually have the cash. Because again, money is expensive,
Yes.
borrowing is expensive. So the low interest one now may be a time to sit down on it and not rush to pay it off, because your money is going to make you more return,
Yes.
especially.
100%. 100%. If you have basically, if you have low interest rate debt right now, this is like an asset.
This is
right?
exactly.
Because it's worth something.
Exactly.
And the other thing too that I wanted to say that I didn't, which is that keep your credit lines open, right? So if your bank, is willing to lend you X, just make sure that they're still willing to lend you X, because what you want to do is have that flexibility. So what happens in a recession is that liquidity dries up, lending becomes less available, credit standards get higher. So basically you want to keep as much flexibility, low interest rate debt, keep your powder dry, keep those credit lines open, or whatever you need to do to keep them alive so that you can activate them easily. Because when you have the opportunity, you're going to want to move fast, and that is actually going to get you a better speed, will get you a better price too, a better deal.
This has been
And
so good.
I'm just trying to think. I feel
This
like
has
I'm
been
also
so good.
forgetting something.
That's okay. All right. We can't tell you everything. Well, but you know what? Mariko is always an arm's away. Now you have the information of how to join her newsletter. And I'm also always going to be bringing her to my community, to my space. So definitely, if you are looking for a community for you to thrive for the next 3 years, and beyond that, to be honest with you, but the next 3 years are going to be critical. I invite you to check out the Money Fit MD School for Badass Women Physicians. For a one-time payment, you can be part of us for years and years and years, which is pretty awesome. So this has been amazing. I knew it was going to be great. I told her we're going to talk for 20 to 30 minutes, but y'all see what happens when we get started.
When we
So
get
good.
going, it's hard.
Thank you so much. This has been so much fun. I'm so glad I
You're welcome.
know you. I'm glad you do what you do. And thank you for enriching us as always.
Thank you for having me in your life. I really appreciate it.
All right, guys. See you guys later.